Hi, good morning, guys. Let's start. Let me share the screen. Let's quickly read the content of the. Hi, Shiva, if I upload the document on the chat, can you download it?
Yeah.
Yeah.
I can't see any document so far, sir.
Wait. Few more will come after that.
Okay.
You can see that, right, in the chat box?
Yeah.
Yeah, you can download it. Yeah, okay. All right. So this question is on planning and operating variance, right? Now, remember, when it comes to planning and operating or any variance related questions, there can be questions on what a particular variance talks about. For example, if you say material variance, what is it about? So then you should be able to explain it's about comparing the actual usage versus the expected usage, which is the standard usage, plus the actual price that we paid for that material versus what we wanted to pay, which is the expected price. So like that with every variance, with every cost element, there are variances. So material has price and usage, labor has rate and efficiency, variable overheads has variable overhead expenditure and efficiency, fixed overhead has fixed overhead expenditure and volume, because fixed overhead is absorbed based on volume most of the time. And then sales has selling price and what? Volume variance, right? So these are your basic variances. Now, these variances will further go into mix and yield and planning and operating variance. Now, what is mix and yield variance? There are some products for which you need to use more than one type of material. So for example, let's say you're making a 1 liter can of paint. So you put material ABC. Standard will say use it in these proportions, these ratios, right? But actually you might change the ratio. You might put more of A because it's more cheaper, less of B because it's very expensive. So when you change the quantities, the product output will differ, quality, right? So in mix and yield, that's what we identify. So mix looks at the change in the percentages, yield looks at the change in the output, right? So that is one you need to explain. You should be able to explain. But in APM cases, what I have seen most is the planning and operating variance, right? Now, what is planning and operating variance? I'll quickly take you guys through it again. Normally, right? Normally, as you can see on the screen, now variance is calculated using original standard versus actual. Okay, it is these two that will tell us whether something is favorable or adverse. Let's say, for example, direct material, let's say standard says 10, but you actually ended up paying 12. So two adverse, isn't it? Price variance, two adverse. Fine. But now later we found out the standard of 10 we set was set before 12 months. Let's say now we are in December. We have set the standard last year, January. Last year, December, November. So by now it is about 12 months, right? 12 months have gone. And now we are comparing 10, which was set 12 months before, with the performance now 12. Now that is an imbalance, no? It's not fair, isn't it? 12 months before, market conditions were different. Whereas what is happening now is very different. And now this is what planning and operating variance tries to analyze. So then standard costing says, if that is the case, this is not right. This will not reflect your actual performance. This will not do justice to your employees. Let's say you're the purchasing manager, right? You have gone and bought it at 12. Now the organization is shouting at you. You have wasted 2 on every kilogram. We wanted you to pay 10, but you ended up paying 12. Now you are like, what can I do? Market has changed, right? Inflation, so many other reasons. Now this is what planning and operating variance try to stop, right? So the solution is standard costing says, fine, you keep the original standard as it is. You introduce another standard, which is called the revised standard. Now, this standard is based on what is happening now, current market conditions. Now you compare your actual performance with your current market conditions. Current market says, as per the current market, your expected price should be 14, but you have actually paid 12. Earlier, the original standard said 12, the standard. No, sorry, 10. Right? When you compare with the original standard, you have paid 2 more. But when you compare with the revised standard, you have actually saved 2. Instead of shouting at the employees, you have to commend their performance. Now, this is the kind of explanation you need to give in the exam, if they ask, right? So, when you bring in a revised standard in between, now we can look at 2 things. One, planning error. Planning error is the difference between original standard or the old standard versus the revised standard. By how much are we different in terms of planning? Then we use the revised standard to look at the actual performance. That's what you call operating variance. So this is what is tested at your level. Rarely, they might ask you to do a calculation, right? But then you should be able to do that as well, right? But more analysis is what is needed, right? Like in this particular question, they'll give you a calculation that is already done, and they'll ask you what is going on here. So you need to properly explain. Don't go and explain the final part. Come from the start. Company did this, they should have done that. And then this is that what they should have done. That is what should be compared with the actual, right? And then talk about the results. So that kind of clarity you must show when you write the answer, when it comes to APM, right? That's why I always say theoretical knowledge is very important in APM. Right now, all what I told you is what theory. And that theory you should be able to explain to the scenario. And normally, guys, planning and operating won't be a 25-mark question. In APM, very rarely you will get a 25-mark question from one subject area. They'll always couple it with budgets or ABC or something, right? Because if you see the paper, they will try to test your knowledge from many different areas. So 10 marks, 12 marks, 5 marks, 7 marks, that's how the allocations will be. Right, now let's look at this question. So here they have given you some data. First part, evaluate the suitability of the approach to budget setting currently used by C, 13 marks. Quite a lot of marks to capture. Now tell me, where do they talk about the current budget setting?
Suppose second paragraph.
Paragraph. Is it third paragraph or any other paragraph, which exactly tells you what kind of budgeting they are setting?
The third paragraph is telling exactly what kind of budget they're setting on incremental.
Are you sure?
Because the advertising and marketing budget has most manageable discretionary expense centers such as advertising and marketing simply add an increment to the previous year's budget.
So that is fourth paragraph, isn't it?
Fourth. Yeah, fourth.
Yeah. So that is where they tell you what kind of budget they are using. See, most managers of discretionary expense centers. It's a very important point. Once again, I'm telling you, so important to know theory. Incremental budgeting says incremental budgeting is suitable when you have discretionary expenses. Now, what are discretionary expenses? Cost incurred at the choice of management. Raw material is not discretionary. Salary is not discretionary. Right? Overheads are not discretionary. I mean, like rent, electricity, those kind of overheads. You have to incur. There's no choice there. Advertisement, charitable donations, you understand, marketing, right? Promotions. Those are the choice of the management in terms of how much they want to do, right? So most managers of discretionary expenditure centers, such as advertising, marketing, simply add an increment to the previous year's budget when the budget for the current one, when they budget for the current one. That is what explains us. Currently, they are using what? Incremental budgeting. If you write, right, for this question, your answer should start with by saying, currently, Caraway is using incremental budgeting. You immediately get 1 mark. Remember that. Okay, you need to explain what kind of budgeting they're doing now. That they didn't tell that. So 13 marks, we have to capture a lot. And talk 2 more points about what is incremental budgeting. It's where you take the last year's budget or actual and add a percentage for the foreseen inflation. Siva, if there is a recession, then what do you do? We are practicing incremental budgeting, meaning every year we are increasing, but we are foreseeing a recession. Now what do we do?
Then we need to cut the expense.
Instead of increasing, we reduce now. We minus 10%. Right? Now that is also theory. So you can write that also. So in case of recession, if we see economy is going to decline, economic cycle, now we need to what? Cut down on a percentage so that all the expenses will be, reduced and reflected in the budget. So that kind of clarity you need to give in the answer, right? Now we come to the important. So about 3 marks, you introduce what incremental budgeting, and then you talk about certain features, as to what it is. And remember, each point in a small paragraph. Don't go and write everything together. The beauty of computer-based exam is that you can always structure it nicely, unlike you write it in a paper, because once you write, you can't do anything. So here, you can write a small paragraph, leave some space, go to the next one. If you feel like you need to elaborate more the first paragraph, again, you can go back. You understand? So, make it look nice, right? Evaluate approach to budget setting commonly used by C. Now, what is the word evaluate? What is this verb about?
Positives and negatives.
Yeah, exactly. Positives and negatives. Positives and negatives. Now, let me show you something. Very interesting. Positive, negative, advantage, disadvantage, pros and cons. All that is evaluate. And normally, the word evaluate is when you have to make a decision. Let's say you're going to get married. Evaluate the purchase of gold. What are the positives of buying gold? What are the negatives of buying gold? And then that evaluation should help you to make a decision whether to buy gold or not. That's the purpose of evaluation. You understand? Why do we have to look at the pros and cons? When we have to make a decision, if the pros are more, go for it. If the cons are more, don't go for it. But sometimes even when the negatives are more, we still have to do it, certain circumstances. Let's say somebody's father is, having a heart attack. Surgery. No money. Have to do it. Somehow borrow and, maybe sell the house. You understand? So sometimes, in an extreme situation, you have to do it. The reason why we evaluate is to look at to make a decision, right? Now let me share something with you. Eva, can you see my screen?
Yes.
Right. Now you see incremental budget. Starts with previous year budget to actual and adjust these by an incremental amount to cover inflation or the expected returns. It also says deduct an amount if there is recession. So that's fine. Now look at the suitability. It's good for stable businesses, cost control, provided last year you did good cost control, right? Limited discretionary cost. If in your organization, if you have limited discretionary cost, it is good, because if you have a lot of discretionary cost, last year, let's say 80% of your costs were discretionary, charity, donations, advertising, you're going to just continue with this year as well, which is going to waste money. I mean, just because you did last year charity, you don't have to do it again this year. Shareholders' money, isn't it? Right? So you have to have limited discretionary cost if you are to follow what? Incremental budgeting. Then we go to advantages. Quick, low cost and easy. Managers not demotivated by targets changing regularly, right? Because it's, going on a smooth incremental fashion. Fine if historic figures are accurate. If historic figures are not accurate, then it's a problem. Now here you see you have 6 points already here. Then you also bring in what? The negatives of incremental budgeting. Any wrong predictions in the past is going to what? Continue into future. Any inefficiencies in the past is going to continue into the future. You understand? Right? Managers will become what? Lazy incremental budgeting. Why? Nothing here. I have done this in companies. Excel sheet, put another column, 10%, drop down, done. Nothing to do. So where's the rational, thinking here? Where's the market insights? Normally, when you prepare a budget, you need to look at the central bank report, what is going on, in terms of inflation, supply, stakeholders, right? Prices, forecasts of demand, sales. It is based on those you prepare the budget. But in incremental, nothing. 10% increase, drop down for everything. That's it, no point. So you're not, making managers more proactive. They become more lazy. No, these are the things that you need to write here. And most of it, they are given in the scenario itself. You understand? So you bring that and put here one by one. Huh? Yeah, right? Are you guys clear now? Are you okay?
Yes.
Right, good. So remember, now when I explain it to you, you will understand really well. But you need to write these answers and see. Right? There's no other way. You need to put your fingers onto the keyboard and type those small paragraphs. Then only you will see, okay, because most of the time, right, like when I explained it to you, you know what to write. But when you want to write it, it's difficult. The words don't come in. You can't match it. So it's a practice. It's like running, swimming, doing any other activity. It's a practice. So please do that. Take a question, type and see. Then only you will break that barrier. Otherwise, it will never work. If you think, no, I'm going to do it on the exam day, no, that's not going to work. Right? You need to do it before. Open a Word document or a notepad, start typing. Okay. So you can do certain things like here. Gross margin is always estimated at 30%. Why? Sometimes it can be 40%. No, then we are losing. Let's say some material costs have reduced in the market, oversupply. So then our margin has to improve. So what is the rationality behind agreeing on a percentage? Material costs represent 50% of the total cost of sales and labor represents 30%. So what's the justification? After workers went on strike over pay in 2017, promised trade unions to pay by 1%, increase by 1% each year for 5 years. Normally, increase of pay for staff should be in line with increase in productivity. You can't just increase. You understand? Because your revenue, if it is not improving, productivity, then why do you want to increase the cost, especially salary? Fine, you give an increment in line with what? Revenue increase. Most managers of discretionary expenses, advertising, marketing, simply add an increment to the previous year. So very comfortable. And sometimes they may be spending on things that are not required anymore. Right? So they're getting a budget cushion. Advertising and marketing budget has increased annually by 8%, which is higher than rate of inflation. There you have one mark. Why do you want to increase the cost beyond inflation and show a reduced margin? Keep it in line with inflation. This has happened for several years. That means you have already lost a lot of money, right? So that marketing manager can take advantage of any opportunities to increase sales volume. So he's playing it very safe. Like I said, you are breeding lazy managers. You are not breeding competitive managers. Now, there's this one company that I worked. We let the marketing manager spend a lot of money in the first 2 years. First year, of course, it's a new company. So first year it made loss. Second year, they made a lot of money. Third year also, we let him spend. He spent like left, right, and center, 20 million minus. Now we have told, no. We agree on a budget and we allow you in line with what? Increase in sales. Right? So you need to do that. If you go like this, freeway, incremental, then this is what will happen. Right. So I mainly want to focus on the second part, right? But budgeting, guys, this is how the questions will be, right? Sometimes they'll say the company is taking last year's budget, right? And every quarter they are renewing the budget. That means they are going on a rolling basis. So normally, this is how questions are said. They don't tell you what it is, but they'll give you a description. You immediately have to go and say what type of budget they are using. All the theory, not only budgets, everywhere, know what the topic is, know the advantages, disadvantages, the features. Because it is those that are tested in the question. So without knowing the features, you cannot try that. You cannot write the answer. Okay. Now look at this. Using the information in Appendix 1, complete the analysis and make recommendations as requested by the CEO. Now, Siva, is this the first class you're joining?
Yes.
Right. In APM, we always say, as requested by the CEO, as instructed by the CEO. Now, only by looking at the requirement, you cannot answer this question. You need to go back and read what the CEO is telling you. Right? It's based on this paragraph and what he's saying here that you can answer the question. Remember that, right? Now just go through this paragraph again, read it. All right, done reading? Now look at this. This is where the work starts. She has requested you to use this to complete any further analysis. We need to do some further analysis. Right? First part of material variances required to identify the causes of the variances in the year. As she believes some variances are out of control. She has also asked you to comment on the causes of labor, material, and other production cost variances. So now, in your answer script, you have to quickly put a subheading. Causes of material variance, causes of labor variance, causes of other production cost variance. You have to individually answer all these requirements. Remember that. You can't put everything into one bucket. What she wants you to now remember, this is not CEO, this is your examiner giving you instruction. One key point that he doesn't like is not listening to him. Right? Examiner always says, my instructions should be followed as it is. So he is clearly telling you, tell me the variance causes for labor, material, and other production. So immediately put subheadings. Causes of labor variance, causes of material variance, causes of other production cost variance for the year, and based on the data that we have, and make a brief recommendation on how to manage causes of these variances in the future. Now another topic. Recommendation on how to manage variances. Then you know, when you write the answer, what are the areas that you need to write. If you don't do that, then while typing, you will forget, okay, these are the things that I need to do. So read the paragraph, read the requirement, read the paragraph, immediately put subheadings. Once you write the answer, go and double check again. Have I done what she wanted me to do? Have I completely done? Then only you can capture the 12 marks. You understand? Right, now let's look at the scenario, the analysis. Right, I'm going to leave this to you now. Okay, for 5 minutes. You have to tell me after reading this, what is going on here. Right, they have told you planning, operating variance. They have given you some variance, they have not given you some. They have put details for some, they haven't put details for some. Right, so I'll give you 5 to 10 minutes. Go through this and give me an answer. Tell me what is happening. And I also want to know the reasons for the variances, material, labor, and other overheads. Right, do we have anything? I will share the complete answer that I've done for this with you. But before that, do we now? Okay, let me show you something. Now look at this 693, yeah. Total material variance 693, adverse. Okay. Now that is what I have shown here, 693. This is the analysis she is asking for. Right? Now, like how I have shown it here, can you arrive at that 693? I'll show that to you in 5 minutes, but can you give it a try? Planning and operating variance. Now you see, you need to know the equation to do that. That's what I showed you at the beginning. Planning and operating. Planning is the difference between original standard and the new standard, or what we call as revised standard. Operating is the difference between revised standard and the actual. Now find that 693, how they have arrived at that. All right, so let's get to the answer, right? Yeah, so I hope you have this question with you. Let's make a note of this. Each hull contains a standard total of 500 kilogram of material, mainly fiberglass and everything. Original standard cost on which the budget was based was an average of 21 per kg. Original standard kya ne? Old standard. Harika. At the start of the year, our supply unexpectedly ceased trading. That fellow shut down. Market price of replacement product which were not to work with increased the overall cost of material by 1. That is revised standard. The price has changed. Our purchasing department was slow to place the order. The internal problem, internal inefficiency, supply of which was scarce at that time, and we paid an average of 2 more. Actually, we have paid what? 2 more. We wasted a large batch of materials because it was stored in damp conditions. The quantity material used was 4% higher than the standard. In terms of price variance, we paid 2 more. In terms of usage, we wasted 4% more. Why? Because our conditions were bad for storage. Now we need to incorporate this into our variance. Okay. Now look at this. Total, I'm only looking at material for now. Total material variance 693 adverse. I'll show you how the analysis is done. Actual quantity into actual price. That's how we calculate the price variance, isn't it? 350 into 520 into 24, 4 million, 4.3 million. Actual quantity into standard price. Standard price is 21, what I told you, but initially planned. So difference between those two will give you the price variance. Is this mouse? Yeah. So 350 into 520 into 24 is 4.3. And 350 into 520 21 is 3.8. So that's, the two difference. 21 and 24, the price. Then the data. Okay. And then usage. See, 21 standard price, we keep it as it is. Actual units 350, 520 and 500. 4% more. No. 500 into 4% is what? 20. So actually we have gone and used 520, but we should have used what? 500. So the difference between 436 and 367 is your 693 adverse. And now you can easily explain what went wrong. So this was the initial 693, the reason. Okay. I will share this Excel sheet with you, don't worry. Yeah, okay. Now look at this. Look at this. Material price planning and operating variance. So I have material price planning variance, material price operating variance. Follow these equations. It's easy. All this is there in your PM syllabus also. Normally, this is not repeated in APM syllabus, but it is there in PM syllabus, and you are required to know this. Okay. Look at the quantities are same. Only the price is changing. Standard price versus revised price will give you what? Planning variance. Revised price versus actual price will give you what? Operating variance. So 182, 364, negative. Then we go to usage. Keep the price same. We keep the price same, but we change the quantity. Standard quantity into revised quantity, again, planning variance. No change there. Revised quantity compared with actual quantity will give you the operating variance, which is 147. Now look at this. 182, 364, 147. That is the net with 693. The 693 here is further analyzed into planning and operating variance. Now this is what she's asking. Understand, the 693, how did it break between planning and operating in terms of material, price, and usage? Now see, it's very detailed. So if you look at this, we have lost everywhere, right? Price in planning, we have lost 182, and operating, we lost 364. And usage, okay, usage, planning and operating, planning, we did not lose anything. We kept up to the expectation, but usage, again, operating, we lost another 147. That is that 4%, wastage. Hence the 693 at first. So our team, in terms of planning also we are bad. In terms of actual work also we are bad. So that's your conclusion, which I have done for you here. Yeah, let me share this with you now so that you can go through. I'll put it in the group. Right, can you take 5 minutes and go through this answer? See if there are any questions you have for me. Mhm. So guys, taking you through the answer quickly. So suitability of the approach to budgeting. This is the size of paragraph that I'm talking to you, right? When you write answers for each point, now for each of these points, you will get 1 mark. I've given you 30 now, I think there's about 40. So this is what you need to get used to in writing. Now look at the first point. Currently, CA adopts an incremental approach. The moment we see the word incremental, we give a mark because that's exactly the correct answer, right? To budget setting, where previous year's budget is handed over to the departmental managers to estimate the income and expenditure for the next year. This is evident in the scenario as managers were given 2017 budget to forecast for 2018, right? So I don't want to go to one by one. You guys can understand. If there are anything that you don't, please let me know. I have just put numbers here to show you the number of points. Don't do that in the exam. You can just go paragraph by paragraph. Then analysis of material variance, causes, then how to manage the causes along with the numbers also you need to. You guys okay?
Yes.
Yes, sir.
Right, let me share the next question with you. Right, guys. I've shared two questions. The first one is equine. Don't do that. Huh? I actually shared it to Siva. You can try it later. That's a good question on testing your calculation, which is for 7 marks, which means you need to finish it within about 10 to 12 minutes. So do that later. But I want you guys to read the next one. Budget, rolling and incremental Hamilton. Yeah, let me share it on the, you know. Yeah, quickly run through the data first. Well, I will share the answer for that rolling and incremental part, but let's focus on this ABB now. All right, so I hope you've gone through the question. Now, I want to do a small exercise with you. Now, look at this. Evaluate whether CRC should move from its current budgeting system, right? Whether they should move from its current budgeting system, ABB. Can you tell me what is their current budgeting system?
Incremental.
Okay, Siva says incremental, Hari says rolling. What is the current budgeting system? It is incremental, isn't it? So you have to be very careful. Okay. So like I said in the previous question, here when you say incremental, you get a mark. Right now, the taking you back to the question, right? Evaluate whether CRC should move from its current budgeting system to ABB. You know the word evaluate. I'll give you 3 minutes. I want you to give me the subtopics under which you will put your answer. Can you quickly do that for me? What are the subtopics under which you are going to write the answer for this question? Just put it on the WhatsApp. Let's see what and what you're putting. This question, your answer under what subtopics? Quickly do that. Yeah. Right, can I have the subtopics? Okay, advantages and disadvantages of the current processes, correct? Two topics, huh? Advantages of current process, disadvantages of current process. What else? Advantages of ABB, yeah, right. Yeah, and you also need to include a conclusion paragraph. All right. Now, difficult. Yeah, advantages and difficulty in implementing, you can put it under disadvantages. Okay, Siva. Right? Huh? For revision, yeah. Incremental budgeting is something that we have already discussed, right? Now, here you go. Advantages and disadvantages of activity-based budgeting. Once again, I'm telling you, if you know your theory, this becomes very easy. Only when you know the theory, you will understand. Because in APM, they'll always match the scenario to the theory. They'll write your question scenario in such a way that it will go along with the theory. For example, they'll say they take last year's budget and add a percentage. Then they're talking about what? Incremental. Or they are trying to do budgeting based on activities. They won't tell you the name directly, right? But the scenario will explain what? The theory. Now here you see 1, 2, 3, 4, 3, 6, 10. 4 advantages and 6 disadvantages. So we have enough here, if you know. Now it is these points that you need to apply to the scenario. Remember, important point. If you are to touch on activity-based anything, you should know activity-based costing. Activity-based budgeting, activity-based management cannot be done without activity-based costing. Activity-based costing information is the baseline for you to do ABB and ABM. So it's like mother of ABB and ABM is ABC. And all three together is known as activity-based techniques. So basically you do overhead analysis, overhead costing using the number of activities and identifying the causes of these activities. Then number of activities along with cost. You forecast for future. That is activity-based budgeting. Very simple. There's no format as such. Costing, we have to come up with the format. So using activities, we forecast for future. That is activity-based budgeting. Okay, fine. Now we have identified cleaning cost for 30 days is 100,000. Why? Per day we clean 3 times. Each time we are paying X. 3 into X, 100,000. Now the cost is too much. Activity-based budgeting says 100,000. Now the cost is too much. We need to reduce. Okay, 3 into X 100,000 is too much for us. Why don't we clean 2 times for a day? So 2 into X, 60,000, let's say, for example. That decision is what? Activity-based management. Using activities to control our cost. So in a nutshell, this is what it is. So activity-based costing is finding activities to calculate your overhead cost. Using those activities and cost drivers to forecast future is activity-based budgeting. Then trying to control cost using these activities is activity-based management. All three has positives and negatives. Activity-based management has another important separation. 2 separations. Operational APM and strategic APM. Right? Operational APM and strategic APM. Operational APM is where you use activity details to manage to clean more or less. How many staff we should have on a particular, activity, right? Then we move to strategic APM. Strategic APM will tell you, okay, our overhead for product X, Y is too much. So it is making a loss. We make a decision to discontinue that product. That is a strategic decision. Our branch in Colpit is, overhead is high. Branch is making a loss. We are shutting it down. Strategic APM. You understand? High level factors are strategic, low level factors are operational. So to make that decision, we are using activities and the related cost. So this understanding is very important. Okay. Incremental positives and negatives we have already seen, right? Advantages draws attention to the cost of overhead activities. Remember, the overhead analysis using ABC is useful, will be effective when your overheads are a larger chunk of your total cost. If your overhead labor hours or material hours or machine hours or units for a OAR. If your overhead is like 40 to 50% or 60%, then you go for ABC. Recognizes that it's activities that drive cost. If we can control the costs, the cost could be better managed and understood. So that is what is part of ABM also. It can be used to identify critical success factors. What are those factors that are important to the organization? For a hospital, hygiene is it important? And hygiene is related to cleaning. Cleaning is overheads. Understand? Maybe we can provide useful information for TQM, right? By relating the customer activity to total quality management. If you take an organization, it's all about activities. I decided to put up a front office. Front office is now an activity, trying to serve the customers, right? The disadvantages. Time and effort required to establish ABB is a lot because you need to identify a lot of activities. Imagine a company like Unilever trying to come up with activities, cost drivers, staffing issues, training and cost, resistance to change, cost of adapting information system so that they can collect and process information. Now, all these activities, while it's happening, you should have systems everywhere, right? Will not be suited to organizations that don't use ABC. That's the basic, fundamental. If you don't have ABC, you don't have activity details. Then you can't use what? ABB. Difficulty identifying clear individual responsibilities for activities and hence accountability for the achievement of the budget. Especially, you have teams sometimes. Whom do you go after? Which team member? Sometimes, okay, let's say in this class, I'm the lecturer, there's another guy who's tutoring. Whom do you go after if students, don't score well? You understand? Sometimes it's difficult when two, three people are doing a particular job role. And then it could be argued that in short term, many overhead costs are not controllable and don't vary directly with changes in the volume of activity of the hotel. For example, rent, overhead, security expense, overhead, electricity overhead, right? Based on based on number of units we do, it's constant. So then, can we apply activities? Is another question, right? So guys, you need to put these under separate headings, structure, and relate it to the scenario. All right. Basically, the second part, complete the analyst work in Appendix 1 as required by the board and explain the variances between the budget cost and actual for each receipt into goods invoice for July as required by the board. That's what we need to read. They have given you some information in the last paragraph which we need for calculations. Now look at this. Very important. The board has never seen an activity-based budget before. When you explain, you need to explain it like you are explaining it to a parrot. They don't know, no. That is why this much of headings, you need to go into the detail. If you are explaining it to an accountant, no need. He knows. He has qualified income, no. But board does not know. Then you need to go from the basic, like how I am explaining it to you, See, and is unsure how it could be used to explain variances between actual and budget performance in the central warehouse. As an example, they would like to see how an ABP, the year ending 30th June 2006, could be used to explain variances from the actual results for the month of 2005. So that's exactly what you need to do. And here also they say that, um, ask an analyst to prepare an activity-based budget for the central warehouse, blah, blah, blah. Right, now, can you quickly complete this work? I'll also bring it to the Excel sheet and do it. Appendix 1, the analyst fellow has done a half-baked job. Maybe he's also an ACCA student. Shall we quickly finish this work? You need this data that is given here to complete the work. Right, we quickly fill this blanks. Right, so I'm going to fill this blank. RFID tagging 100,000 divided by each member of can Ravan can tag 35,000 items per month. right? So into, let's say, 3 in the brackets. $24,000, no? You can't say 2.85 staff, no. It has to be rounded off to 3. So 3 into 24,000. 72,000. And all that relates to good influence, right? Yeah. Tagging. That is lease. Then warehouse staff wages, have you done the figures? What is the total? Okay. No, let me do it. I'll just do it here. Warehouse. Number of staff required. 12 plus, they say another 2 they need, isn't it? So 14 staff. Wages, total wages. Um, 14 into 22,500. 315. No? 315. Yeah, each. Read carefully. Then I think we go 50-50, right? Yeah. 0.5. Heat and light, I think that's easy. How much? 10,000. And they say that entire thing relates to the other. Then you get the total. EMI not. Sorry, guys. The total. Diva, do you want me to explain the calculations?
Sir, please. Yes, sir.
Oh, sorry, because I had put the screen on this thing anyway. Right, so now warehouse manager salary is given 55, and this it all relates to other. Lease of RFID also is given 30-40, 30-45. RFID tagging. RFID tagging, they say we have 100,000 units, and each one can do about 35,000 tags. So that comes to about 2.86 staff. So we can't have 2.86 staff, no. So we say 3 staff. 3 into staff 24,000. So that's the 72,000 here. And the entire 72,000 relates to good inward. Right? Then warehouse staff wages. Now warehouse staff currently we have 12. Let's say we need another 2 more. So 12 plus 2, we need 14. Each staff will be paid 22,500. So 14 into 22,500, 315,000. So that is here. 50-50 for good inward and good outward. 50% of 350. And heat and lighting is just direct 10,000, which all relates to other. Yeah. Normally, a question like this, students make mistakes when they don't read it properly. Right now, even that 72,000 for people who put 2.86 into 24 also, the marks were given because that's technically that's correct. No? Huh? Hmm. You are you okay? Calculation.
Uh,
Any question? Let me share the comment with you as to how you should comment on it. Go through that comment. All right, guys. Let's take a break and come back. Let's take about 15 minutes and come back. Huh? We'll keep it closed. Okay. Right now, let's quickly go through this one. Why I chose this question is it's very tricky the way they ask the question, right? You need to understand in APM, how these kind of questions can come and what kind of answers that you need to give, right? Let's look at the requirement. Number one, for the A part, using Porter's five forces model, assess the impact of the external business environment. Assess the impact of the external business environment on the performance management of stock and give a justified recommendation of one new performance measure for each of the five forces areas at Stokeness. So of the 16 marks, you have 5 marks for 5 performance measures. Okay. Of the 16 marks, allocate 5 for 5 performance measures. The performance measures you need to just say, for example, let's say market share and just say one line. That's it. You don't have to go on explaining much, right? Balance 11 marks is explaining what Porter's five forces is, and then using it for the other part, that is the impact of external business environment on the performance management. Discuss B part. Discuss how the problems of defining the market in measuring a market share apply for Stokeness. So that's a little tricky. Let's park that for now. Number 3, assess the risk appetite of the venture capitalist and discuss how this might impact on performance measurement at Stokeness. Right now, first quickly go through this scenario. Read through the scenario. All right. So using Porter's five forces model, assess the impact of the external business environment on the performance management of Stokeness. Right. What is Porter's five forces model? Huh? No. That is the model, no, but what is Porter's five forces model? That is the first thing we need to say. Right. So what you should say is, so it's a model that helps an organization to understand how a particular industry operates, or what is the word? When you say Porter's five forces, there's this word which you must use in explaining that. Attractiveness of an industry, isn't it? Attractiveness of an industry means ability to make money in that industry. Profitability. Either you need to use the word attractiveness or the word profitability. Right? Industry profitability or industry attractiveness, according to Porter, depends on 5 factors or 5 forces. Now, what are these 5 forces? Bargaining power of customers, bargaining power of suppliers, threat of new entrants, threat of substitutes, and finally, competitive rivalry, competitive environment or rivalry, you can say. If all the forces are strong, profitability is weak. If all the forces are weak, profitability is high. You understand? So here, so all that is just for 2 marks, right? 2 marks, yes. Right? Because from 16, 5 goes for the 5 performance measures, about 2 for the explanation. So that's 7. The balance 9 only the main answer, which is assess the impact of the external environment on the performance management of stores. It's a very, super question. Right now, tell me, how will you answer this? Assess the impact of the external environment on the performance management of Stokeness. You guys can give me 2 lines, at least on one force. Okay. But I think I'll take you through the answers. That's better. So understand how to write this. Huh? So we'll look at one by one. Hope you guys can see the screen, huh? People online. Yeah. So remember, when you introduce a 5 force, you need to say what it is. So threat of new entrants will depend on barriers to entry, like skilled staff, investment, technology, government approval, regulatory environment. So those can act as barriers. Now you see, you need 5 to 10 years to develop a cell, isn't it? As per the scenario. Is that easy or difficult? Difficult. So that itself will act as what? A barrier. And also have a huge funding requirement. Right? So I told you investment can act as a barrier. Need strong relationship with major vehicle manufacturers. Without that, what to do with your fuel cell? Isn't it? Because it's the part of the vehicle. So you should be able to sell that first to the vehicle manufacturer so that there is acceptance. Right. Now see, question is what? Assess the impact of the external environment on the performance management of our company. So external environment, barriers to entry. External environment, 5 to 10 years to develop a cell. External environment, huge funding. External environment, strong relationship with major vehicle manufacturers. Now, these will decide how we manage our things internally, isn't it? For example, there's a funding requirement, so we need to seek out. If so, right? Strong relationship. So we need to go make relationship to sell the, batteries, right? So things in the external environment are impacting how we do things inside. Okay. Then performance measurement. There are so many, you just need to write one. Initial capital required can be a performance measure for threat of new entrants. Customer loyalty, contracts with vehicle manufacturers. Let's say you have contracts with all the vehicle manufacturers. Revenue from patented products, right? Now in Sri Lanka, there's a story that they're going to import some vans and buses, right? Toyota vehicles. They say only Toyota Lanka is authorized to bring down the vehicles. Now that will impact all the vehicle sellers who are selling this van or whatever, isn't it? Who want to bring down and sell. They can't. Why? The agent is having authority. So what is happening in the external environment is having an impact on what you do inside or what you want to do. Understand? Next, there are substitutes. Electrical batteries, substitute. Compressed natural gas, improved diesel petrol engines, right? With fuel efficiency, with hybrid technology, can all become substitutes. And what are substitutes? Other products and services which can give you same or similar benefit, utility, right? Main threat would come from DP engine improvements as they are already in use and many more are comfortable with it. As you can see in real life, there's a slow tendency towards electric vehicles because we are so used to it, petrol and diesel. Confidence factor, right? We know where the heads are, we know how to repair the vehicle. We have been doing it for so long, so many years, right? Constant scanning of the environment is needed to identify and understand the threat from the above substitute. You need to constantly scan because people are coming up with new products. Hydrogen fuel cell, hybrid, batteries, right? The effectiveness will depend on the ability to provide value, reduce emission, and energy output. So to what extent they will become successful will depend on value provision, emission reduction, and energy output. I mean, if you can't run much than fuel, then no point. Performance measures, price versus performance of each substitute, availability of substitute products, switching cost from your main product to the other, inclination towards the change. To what extent people will be willing to change, propensity, right? So these are what you can put down for threat of substitutes. Then power of suppliers. Power as the material supplied are rare. The material that comes in is quite rare. So only if you have access to it, you can manufacture. So the moment you have access to it, you're powerful, right? Or supplier power. Whoever who has it, they have the power, meaning they will communicate price. We can't negotiate. Whatever price they say, okay, we have to buy. Output will depend on the availability of raw materials along with its price. Few suppliers could dictate the market. Few suppliers are there, so they will affect how we perform, what we do. We have to listen to them. Engineering subcontractors power via the design of the product. Protect know-how by legal enforceable non-disclosure agreements, right? Because once you sell, if the other company finds out how you are doing your fuel source, then you are losing business. So you need to protect what? Your patents or whatever, right? Measures switching cost significant on the supplier's product in the main product. If the supplier's product in the main product is only 1 or 2%, then there won't be much focus. If it is like 10, 15, 20%, 30%, then okay, you are very careful. And number of suppliers, of course, more the merrier. If there are more suppliers for manufacturer, it is good. If there are few suppliers for the manufacturer, it is bad because manufacturer has to listen to the supplier. Power of customers. Customers are major bus and truck manufacturers, isn't it? They are the ones who need. Very large in terms of volume and operations. So customer power is very high. In terms of being, manufacturers. Need strong partnerships if Stokeness is to sell these manufacturers, sell to these manufacturers. So again, we are going back to that relationship part. Manufacturers might even buy Stokeness if the product proves to be good. Good exit option for investors. So you get hold of a vehicle manufacturer and you tell, buy our company. Because now you have a fuel source. You integrate. So good option for exit for the investors. They can realize their money, isn't it? So switching cost, availability of suppliers, and availability of substitutes, right, will become the performance measures. You can explain one of it, not everything. And finally, rivalry. Existing competition power is low as Stokeness has a 2-year lead. Now they have already started and they are 2 years ahead. So more like a first mover advantage they have. You always look up to the company which introduces it, isn't it? And there's a bit of confidence built in that company. Patenting all innovations can protect company's product space, so rivalry can be reduced. Must maintain commercial confidentiality within Stokeness and commercial partners. So you need to protect what is going on inside. Performance measurement can be market share. Once the product is launched, you have to explain that in the exam. If you say market share, because now there's no market. Time to market, lead time, more suitable as it will push the company to launch a viable product faster. Clear? Right now, this is my favorite part, the B part. Discuss how the problems of defining the market,
So
measuring a market share apply for Stokeness. Yeah, Siva.
I have a doubt on the part A. So it says now we have assessed the external environment and given a performance measure. But where does it say the impact on performance management?
Yeah, so what we are going to say is each of those factors will decide how and what we do inside. Now, all 5 forces are mainly connected to the external environment. No? For example, let's say there are a lot of substitutes coming in, right? That means now customer has a lot of choice. We also need to become very competitive. So we need to increase our investment. We need to become more creative. We need to innovate the product. We need to focus on efficiency when it comes to this battery or whatever, You understand?
Yes, sir. But so for that, we are giving a performance measure. The question is a little vague, sir, because in the past papers also I
Yeah,
have seen this
exactly.
problem. When it
Yeah,
says impact of the performance management, I'm not sure how to write that.
yeah. Now that is the whole thing with APM. Sometimes these questions are designed like that. Even the B1, when I give you the answer, you're like, oh my God, is this the answer? Right? Wait. It looks vague, right? But what actually they are asking is, what are those external factors which will influence our, internal performance? So within those five forces, whatever that comes down will influence our performance inside. So that's what I
Okay.
said. If there are a lot of substitutes, then we need to up our game because we also another option to the customer.
Okay.
Understand?
Okay.
Yeah. Right. Then make up and discuss how the problems of defining the market in measuring a market share apply for Stokeness. I will reword the question in a while. Then you will ask me, okay, is this the question? Now try to understand this question. Stokeness mission is to provide world-leading reduced emission, fuel-efficient power products for the motor industry in order to optimize shareholder return. Okay. And they develop hydrogen fuel cells for use in powering large motor vehicles. Now answer me this question. Have they started to sell? Siva,
No.
do they have any of their hydrogen fuel cells in any of the vehicles that are currently running?
No. No.
No. Keep that in the back of your mind, right? When will a company have a market share?
When the product is in the market.
Exactly. When the product is in the market, a company will have a market share. Whereas our company, they still haven't even sold. Now the question is, discuss how the problems of defining the market in measuring a market share apply for Stokeness. Super question, right? It will take a bit of time for you to understand this. What they are asking is, okay, let me write it here. How can S define a market share? Is it only hydrogen fuel cell sellers? Or is it hydrogen fuel cell sellers as part of all other available power sources like petrol, diesel, hybrid, then hydrogen, fossil, whatever? Is it part of that? No, you have to give all options. So they are asking, what are the options? Discuss how the problems of defining the market in measuring a market share apply for Stokeness, right? Now you see the options we have. Right? Shiva, you can see my screen, right?
Yes. Yes.
Yeah. Currently, you have to say there is no market, hence the market share cannot be assessed. If there is no customer, there's no market share, right? Firstly, we need to decide what product constitute a market, and then based on that, based on what sale we make, we can calculate our share. Food industry, fast food is one section. That is one way to look at it. Or all fast food is market size. What is McDonald's market share? What is Burger King's market share? That is within the fast food. So that is one way to look at it now. Your domain, in your domain, what is your percentage? Or in the bigger domain, food industry. So similarly here, Firstly, we need to decide what product constitute a market, and then based on what sale we make, we can calculate our share. So based on the above, few options are possible. Number one, as we can observe, there are several substitutes for tokenized products. The range of the competitors should be selected carefully. Though some of the products don't fall into low carbon category, the improvements done by the manufacturers will push them to be recognized as environment friendly products, ultimately making them a competitor of tokens. Now, you also in that category, no, environment friendly battery. Then all producers of environmental friendly batteries will become a market. In that, what is your share? Further stage of the life cycle will also make it difficult to measure the size of the market for a specific supply. In addition, once a vehicle manufacturer accepts a specific engine with developed capabilities which are thought to be more carbon efficient, those products will also fall into the same market. Accordingly, these factors will make it complex to define the market and the market share of tokens. Right? Market share could be calculated by considering tokenized revenue in fuel cells market over the total revenue generated by the fuel cells market. So only one product category. Fuel cells compared to all alternative energy sources. Board needs to decide how they should look at this definition. Right? Super question, isn't it? Especially when you are coming up with a new product, guys. I mean, what's your market and how do you calculate your market share? You understand? So electric car, a simple example, electric cars. Are we looking at electric car of Toyota's market share only among electric cars of all other manufacturers? Or are we looking at electric cars as a percentage of all kinds of vehicles that are there? You understand? That's the question. So how complex is this is to identify a market share? You guys understood? Siva?
Yes, sir.
Nader, are you there?
Yes, sir.
All right, good. Now see the kind of I don't want to use the word difficult. I mean, how tricky it is for you to answer these questions. So you need a lot of practice, guys. APM is all about question practice. Only then you will get used to questions like this, because he will never ask you. Now, like I said, what are the issues in identifying the market for this product? It's a very direct question, but the way they word it can confuse you, and you don't know how to write, what to write. So that can only be overcome by doing more and more questions. Then you get hold of that examiner style of thinking, style of questioning. You understand? The moment you figure out, he's asking ABC, right? But the ABC, he won't ask you directly. He'll go here, there, and only come. Right. Right, third part. Assess the risk appetite of venture capitalist. First question. And before end is one question, after end is another question. Now, discuss how this might impact on performance measurement at Stokes. So what is the risk appetite of venture capitalists normally? There are three risk types. Risk?
Risk averse, risk neutral.
Venture capitalist.
Risk taker.
Exactly. They are risk seekers. Here, you need to explain these 3 points. Venture capitalists are risk seekers. High investment, high return expecting people there. See, normally they go for high risk, high return projects, startups. They will give you a lot of money, provided you give them back what? The returns quickly. They are willing to invest in 10 projects. They are okay to fail in 8 projects, but they will want 2 to succeed and give you the money for the entire 10. That's how they invest. They will invest in 10 projects. 8 can fail, but 2 has to be successful, which will compensate for that 8 also. High risk, high return. What kind of projects do they like? Technology driven, medicine, right? Energy, Those are the areas that they would like to invest normally, because those are what? Quick return. Will absorb losses from few, provided few others make sufficient returns. That's what I told you. 8 can make loss, but the 2 has to give returns. How it will impact performance measurement? They will look at medium-term and long-term performance measure, because they know in the very short term they can't make any return, isn't it? Now see, understand. Let's say you guys are running the business. I am a venture capitalist. I give you money, right? Now, for your business, you have to have performance measures. Question is, how will the venture capitalists affect your performance measures? And now I will say, look, I'm giving you 10 years, I need the return. And now you have to come up quickly with what? Medium-term and long-term performance measures, which will satisfy my requirement. Because you know, if you don't satisfy my requirement, I will take the money back. Or I will not give you any more cash. Number 2, we mainly focused on cash flow measures so as to not run out of cash before the launch. You come and tell me we have made 10 billion sales and the entire sale is credit sales. I'm not interested, because I know money is not realized. So my focus is on cash, pure cash. Measures will be impacted by achievement of key project milestone and profit targets. So you will tell me first quarter, 30% will be done. Second quarter, another 40% will be done. Now I will watch that, because you have promised, isn't it? Milestones means targets. And of course, profit targets. Performance measures will also focus on the venture capitalists' exit from this investment. Now, I will have a target to get rid of this investment after a number of years. You will also know, okay, this fellow is trying to get out, so I need to make sufficient return and keep it ready, because the company has to have a value for me to sell it at a higher price than what I invested in. Right? So my exit strategy will also impact your performance measures. And performance measures will also relate to key updates, progression of the project, along with their achievements. So in all these areas, right, venture capitalists will have an impact on your performance measures. A little tricky to understand, isn't it? You guys okay? Shiva and Ajura?
Yes. Yes.
Yeah. So like I said, it's a lot of practice, right? And you don't have to select an area and then try to do a question. Just do it randomly everywhere. Because in APM, guys, you can't do one question. For example, let's say you do a question in budgeting. Take another budgeting question and do based on this. You can't do that. Each one is totally different. The content, the way they ask, what they ask, timings, right? So it's a lot of practice. So please do more questions. Even if it is old questions, it's okay, because the style of questioning is still the same. Marking is always pretty much same. So don't worry. Practice, right? Small paragraphs is what is needed. And ensure you are on the spot. Answer the point. Don't go to beat around the bush. Never use words like company will become efficient and effective, right? Their profits will improve. How? You need to say how. You can't just give a generic answer. Now you look at all these answers, very specific. Very, very specific. For this soup, you need to put these ingredients. You can't say for this soup, put good ingredients. Good ingredients what? You want to be specific here. Put, I don't know, A, B, C vegetables, you know. You want to be very specific. Don't go to talk about the question scenario. Stokeness is this, they started on this. No need. It's all there in the scenario. Directly jump to the answer. Directly jump to the answer. And I always keep reminding you, any question that gives you 5 or more, explain the theory that they're talking about. Now here they're talking about 5 forces and giving you 16 marks. Say a few words about what 5 forces is. You have marks for that. 5 or more, not less than 5. If it is less than 5, directly you go to the answer. But if it is more than 5, try to explain in 1 or 2 sentences what the theory is. A little bit, right? Okay, so with that, let me call it a day. Any questions? Are there any questions?
No, sir.
Okay. And guys, if there are any particular questions that you want me to do in class, please let me know. If there are any special ones, Which paper? Okay, okay. Share it with me. Right. So let me know if there are any difficult areas you want me to explain again, let's do that also. I'll see you guys next week. Good night.